The New York session is probably the easiest session in all of trading, and in this video I'm going to give you a simple one time frame trading strategy that you can start to use that does not require daily bias. All it requires is liquidity. So let me show you what the strategy is step by step. Okay, so for this strategy you can really do all your analysis for New York session on two time frames, which is the 15-minute chart or the 5-minute chart. Now in this video I'll quickly show you both, but let me just get onto the 5-minute chart, and I just want to show you what you want to look at when you're trading New York. And for those who don't know, I'll put it on screen now. New York session is 7 a.m. Eastern to 10 a.m. Eastern, right? 7 a.m. till 10 a.m. Eastern. That is New York session. And London session, which is also really important, even when you're trading New York, is 2 a.m. till 5 a.m. Eastern, right? Always in Eastern time. So on TradingView, come down here, click this, New York Eastern time. Doesn't matter where you live in the world. I'm in the UK. If you live in Nigeria or India or California, still use New York time, right? Doesn't matter where you live, always use New York time. It just makes it simple for everybody. Now, when you're trading New York, you ironically have to look at London session, because London session really just sets up the real move in New York, right? New York's really where all the money's at, because the Europeans are up, the Americans are up, all the money's there, right? So New York session is where the most money's at. So what London session does is, and you can see it here, right? It's always a fake move and then the real move happens, right? This is what London session always is, right? So the fake move and then real move off in the opposite direction. Now, of course, you can trade London session. There's actually quite a few videos on the channel where I talk about London session, but we only care about New York session. And you can see, almost ironically, look at the bottom of the chart here, right? Can you see this? 7 a.m. Look at the black thing there. 7 a.m. Eastern. This little doji candle all the way up here is 7 a.m. Eastern, right? So this is literally the beginning of New York. So let's just remove this blue line. And you remember how I said London's a fake move, then the real move, right? What does New York do? Right, New York 9 times out of 10 will be a retracement and then a continuation of what London's done. So London here is bullish, right? London here is bullish, and the New York session right here, what is it? A retracement into a fair value gap. We'll talk more about this later on, and then continues London's trend, right? So New York is almost always a continuation of London. That's why it's so easy, right? Because London does all the hard work. However, it's not as easy as just put the Fibonacci on and hope and pray that you make money, right? I wish it was that easy, but it's not, right? There's always a missing piece in trading, and the missing piece in most traders, at least in my experience, teaching literally tens of thousands of traders, is something called a liquidity sweep. This is probably the missing thing in your trading, right? If you're not profitable and you've been trading for 3 months and above, some of you have been here for 3 years, it's likely liquidity sweeps are holding you back. So if you don't know what a sweep is, I'm going to put it on screen now. It's very important. Maybe take a picture or, screenshot, pause the video, do whatever you need to. Really, really important. I'm actually going to show you it on the 15-minute chart, and I'll show you it again on the 5-minute chart, right? But the key thing to understand when we're trading New York is that New York is always, not always, but most of the time, a continuation of London, right? That's pretty easy. That makes sense, right? It's not rocket science. So when you're trading New York, just look at London session. What has it done? It's gone up. Wait for retracement and then enter. However, we need to wait for one more step, which is a liquidity sweep. So you know what the picture is of a liquidity sweep. It's a fake move in the opposite direction. It's a stop run, right? That's the key thing with a liquidity sweep. It's a stop run that grabs stops and moves off in the opposite direction. Now, can you see, by looking at this bit of price action, can you see any major stop loss orders that have been like purged, raided, whatever, grabbed, whatever you want to call it, right? Have a look at this. This is previous day's low. Let me mark this up for you. This is previous day's low. Oops. And what does price do? Right, I know it tapped it. I mean, it's basically equal lows here. What does price do? Right, and remember, London session is, where is it? Like 2 a.m. around here. London session, and you know how I said London's always a fake move? Do you remember that? Like a minute or two ago? London's always a fake move. Well, it's not a fake move going randomly to some random place, right? It comes straight down here. It grabs out all the liquidity at previous day's low. And then what does it do? It instantly and aggressively shoots off in the opposite direction. And for those who look at market structure, I do not. You have your market structure shift, right? I mean, I don't look at market structure, but can you see in logic, in price action, price comes down, it takes out this stop loss orders here, previous day's lows, quickly shoots off in the opposite direction. That's our liquidity sweep. That's exactly what we're looking for, right? We have our sweep. Now that we have our sweep for New York session, and for any session, you always need a sweep. And now that we have our sweep, we can actually start to look for our entries. So we know any retracement here that we enter on is high probability because we've waited for a sweep, right? We know that this move here is a stop run. It's very unlikely, right, that price is going to come all the way down here and take out your stop loss if you put it here and then shoot off, right? Now, why is that unlikely? Because we've already done it. We've already come, price is already, I mean, look at this, right? This is a bullish market. Look at these tiny little weak candles, weak candles. London quickly comes down, takes out stop loss orders and shoots off. Very unlikely in New York session that price is going to come all the way down, take out your stops, and then shoot off in the opposite direction, right? Well, I won't say impossible, but 9 times out of 10, you're going to be safe, which is why we always put our stop at this low. So all we need now is an entry. For me, I always say this, simply wait for a fair value gap to form in the opposite direction. I mean, look at this beautiful entry. You're going to enter, and this is the 15-minute chart, by the way. And I'll show you it briefly in the 5-minute chart. Stop is always fixed at the low. Do you know how I said it's very unlikely that price is going to come down and take out your stop? It is likely that price will come down here and fill out the fair value gap, maybe tap, I don't know, a 5-minute order block, let's say here, and then shoot off. So it is likely that price could do that, which is why we always have our stop at the low. And again, if you want to finesse it, you can go into the 5-minute chart. So what you're going to do to take profit is you're going to target a simple 3-to-1, right? Simple 3-to-1. I always say this. And for those who don't know, I mean, I don't think anyone really knows this, apart from maybe my private students, but this used to be my trading strategy for a long time. I mean, literally New York session, 15-minute chart, liquidity. That was my trading strategy for a long time, and I was a happy man. I was a very happy man, so make of that what you will. Obviously, nothing guaranteed, right? But for your take profit, especially on the 15-minute chart, and especially as a day trader, you want a free risk to reward ratio. I would not hold on for longer than that, right? Because what can happen is price can reverse. And I'm going to show you this in this example, right? Because you're going to think, oh, Atif, easy liquidity here, right? Equal highs, previous day's high. Let's put our stop here. I take profit here. Price is about to go to it. Well, let's see what happens. Very nearly hitting your take profit. And then look at that. Price starts to reverse, right? So this is why I always say, get your money and run. Literally, get your money and get out of the markets, right? And by that, I mean, target 3-to-1 more often than, well, it really depends on your trading strategy, right? But target a free risk to reward ratio. Do not, hold on for these insane risk to reward ratios, right? Because this strategy is actually a decent strategy with a decent win rate. So let me just quickly show you what this looks like on the 5-minute chart. Let's just remove this bit of price action because it's going to be hard to see what we're actually talking about. So if you wanted to enter on the 5-minute chart, pretty simple, self-explanatory. You've got your sweep. And again, you can kind of finesse it here, can't you? With your entry, but your stop, let me just remove this. Your stop is always fixed at the low. And for those who don't know, or who haven't tried it, if you use this indicator here, it will literally plot the sweep for you, which is why I love this indicator, because I'll be honest, sweeps are very hard. Like me telling you that, hey, look, New York is a retracement and a continuation of London, that's pretty easy, right? Anyone can spot that. This is London's move, retracement, entry, but the sweep's pretty difficult, right? I mean, you can see a 5-minute sweep here. Obviously, the 15-minute chart, it would be the sweep over there, right? So get this indicator. It's in the pinned comment. It will be in the, it might be in the pinned comment, actually. There might be a free training, but it will definitely be in the description, right? So if you look at it, it should be in the pinned comment or description. Go look at it, go check it out, go try it for a month and just see if you like it. But I'm telling you, this right here, this will save you a lot of pain, right? A lot of years and tears went into building this. So that's what you would do. And then for your entry, again, you can just enter on this fair value gap here. It really does not matter. It's your entry here. Stop always at the low. So this shaded box here, for those who are wondering, that's just to tell you what the sweep is. So your stop's always going to go at the low. And by the way, so if you're watching this video, the CEO, so the firm who actually built it, they've just added alert. So like you can wait for the sweep, wait for a fair value gap. You can actually wait for price to start to retrace, and then you'll get an alert on your phone. So if you're trading and you're working a job like I was, you can get a quick alert saying, hey, look, there's a sweep, there's a fair value gap, price is starting to retrace. You probably want to get on your phone and look for it. So that's a nice little tip for all of you who are going to get the indicator. That'll help you out massively. But trading the 5-minute chart, get your 3-to-1 like that. I mean, again, anything more than the 3-to-1, very likely that price can reverse. But you really don't need more than the 3-to-1. But if you do this consistently over and over and over again, you're going to start to, well, nothing's guaranteed, but you get the point, right? Keep back testing it. Try it out yourself, and if you want a full free private training, it should be in the pinned comment down below. So if you want me to explain everything you need to become profitable outside of YouTube, right? So I don't have to I don't have to hold anything back. Go check out that private training. And if you want the indicator, it should be in the description down below. So in the description, indicator, in the pinned comment, free private training. It's actually a brand new one. So some of you have seen the old one. It's a brand new one. So if you're watching this now, you have not seen that private training. So go check that out, and I'll see you guys in the next video.